What a choppy market. The market's in the day bullish. My name's Des here at Grok Trade. It's Wednesday, April 22nd, 2015, and the S&P 500 up 0.5%, almost the same here for the Dow. Nasdaq up more than 0.5%. Small caps of the Russell's 2000 up a mere fraction. Banks, though, up 0.35%. And you had a sell-off here on gold and silver, both down 1.3% plus in the markets. And here we are looking at the S&P 500 daily chart through the lens of the spiders, which is an ETF, exchange traded fund. A couple things I want to share with you here. Today on the S&P 500, we opened the day on a gap higher. So we closed here the day before. Yesterday, Tuesday, we gap higher, or I'm sorry, today, Wednesday, we gapped higher. This was Tuesday. Wednesday, we gapped higher. And then crash and burn, crash and burn, crash and burn, making a new lower low. And that was doing just as what we expected would happen. Remember, I said anytime you get a bearish thrusting pattern at a resistance point, look for downside potential here. Sure enough, it did just that. However, buyers came back in, buying up that weakness, running it back northbound, and then breaking through resistance area and a second level of resistance. Remember this area we've been talking about? Resistance, resistance, resistance. Boom! We crack resistance on lackluster volume. But nonetheless, we get a close above that. That is very, very bullish in the face of big time problems in the market. The markets were bailed out of some big, big problems today with this close. Very interesting to see that. If you look here at the Dow, we went lower, 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 even below the 20-day moving average, getting close to a support area. And at that moment, it went higher, 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 higher. Now we have a bullish harami, but you really can't even call it a bullish harami because anytime you're in a big symmetrical triangle like you are here, moving averages converge together, just choppiness. You don't look for any sort of reversal candles really in this case. But this thing is set to explode to the upside or downside. We're coming into the apex of this symmetrical triangle. It's building up a lot of power. It's like a coiling spring. It's getting tighter and tighter and tighter and tighter, and then boom or boom. It could go either direction. Let's take a look here at the Nasdaq. Nasdaq, remember yesterday we said we got a breakout? I said, that's really bullish. Today, sure enough, boom, higher. So the problem is the last 3 bullish days we've had has been on declining volume. I mean, we're going bullish, but no one's really participating in this big run. Remember, volume confirms price action. It gives you the worth of the move. So the higher this thing goes, the less it's worth. Small caps here went down, challenged some areas of support, broke them, came back higher. Now above the 20-day moving average and an EMA exponential moving average here. And taking a look here at gold. Remember I said big triangle. This is a bullish pennant. This pennant did not break up. It broke down on big volume. Look for nothing but downside potential here. No way I would be long gold. Silver continues to drop. This, I'm going to get rid of it. This left the bull flag days a long time ago, but we're coming to a big time support area. This area around the $15 mark on SLV could be a buy point, so be watching that. However, with the volume coming in on the sell side, it could just blow right through it all. Big shout out to Mark the Meerkat because he is jumping in and doing my video for tomorrow and the weekend edition. I will be at the Padres game on Saturday night against the Dodgers. Looking forward to that. A business partner of mine, Ken Shamrock, who is a world-renowned mixed martial art fighter. He helped get the UFC started and also known in WWF, which is now WWE. Will be doing the ringing in of the bell at that event. I will be with him in San Diego. If you are from San Diego, let me know down in the comments. But thanks, Mark, for standing in for me the next couple days. We'll catch up with you guys later.